Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, daily chart, and I've left up the note there that I put on it yesterday, and that's because the note I put on it yesterday is the deal for the entire week. And if the bears are going to produce anything, that's the scenario in which they have to produce it. And every time they fail to produce it, you're going to get what you had yesterday, which is new highs. I spent the majority of yesterday long. I tried a couple of shorts, one pre-market that I ended up scratching before the bell, and I'm glad I did. And then one later in the day from 67.5 on an inability to break above a proprietary moving average that we use, and I ended up scratching that after it couldn't pay me when it couldn't break through 65.5 before the bell. The rest of my day was spent figuring out ways to get long and stay long, and it ended up being a pretty good day. My only suggestion to all of you, especially those of you that aren't in the room with us every day and are just kind of out there doing your thing, is when the market is in an upper band ride, when the market loses key areas like 2259, which we discussed yesterday, you had the move up, you had a lower high in the 59 area. It was back to retest 59. When 59 got lost, you can see off the open, there's the 9 o'clock hour, they went ahead and they squeezed them. They squeezed up to 67.75. They pulled it back as deep as 59.5, but this is just a dip to buy. Here's 15 minutes. Here's your open. Here's your dip, and there's the rest of your day, effectively. Okay. The afternoon was another kind of a chop to a down type of a fest. It's very difficult to ignore these moves in a rally. But to be honest with you, I usually do in an upper band ride. Two things. You can't trade every inch of a tape every day, all day long. You can't. It's you put too much pressure on yourself. Mistakes are going to get made. You can't do it. If you focus on the trend, if you focus on trying to be on the right side of the tape, your day gets easier. It's easier to make your handles, and you stay in tune with the market. So where do we go from here? Well, we got a little bit of a news event today, don't we? You got the Fed at 2 o'clock. Everybody and their mom thinks they're going to raise rates. What's the reaction to that going to be? I don't know. And I'll let you in on a secret. Neither does anybody else. Okay? There's a million different opinions about a million different things that can happen. We're going to do the same thing that we always do, which is watch price, watch the reaction, identify the reaction range, and then determine from there whether we're making lower highs or higher lows, breaking out or breaking down, and from there you'll get trade setups. Okay? Everything else is just intellectual stuff. That's not going to help you trade. You have to watch price, understand risk, and then look for opportunities. So I'm not going to be gaming the Fed. I'm not going to be sitting there at 155 saying, well, I think ultimately we go up, so I'm going to buy here. Or ultimately we go down, so I'm going to sell. You wait. Now remember, you got the 2 o'clock announcement and you got a 2:30 press conference. So you've got a double whammy, so to speak, as far as events are concerned. Press conference is going to have a heck of a lot to do with the reaction. And it may reverse the reaction. It may exacerbate the reaction. Don't know. I haven't seen the press conference yet, and neither has price. And that's what's important. So focus on price today. Focus on risk. Control your size. And understand that until we fail to engage this upper band for an entire day and break below the prior day low, which today is 47.75, this band ride is going to continue to magnetize, and you're just going to see price get pushed back up into the band. I think it's very likely that through the volatility today that we engage that upper band and carry the band ride into tomorrow. The Bollinger Bandwidth, which I follow very closely, is at about 5.2. The bands certainly aren't blown out, but unless the bears keep up this pressure, you're going to see the bands kind of run away, kind of like they ran away here. They just kind of ran away, and then price had to migrate back to the green line here in the mid band, tighten up, and then bounce off, and then re-engage. What the bears would like to do, the bears have got a lot of key areas they have to get through. 47.75. Before that, you got to get through 55.75. Well, let me back up. We're trading 68. We're sitting on a key level now, which was the interim high yesterday at 67.75. Then you've got 55.75, 51.5. Then you've got 47 to 46.75, which is the low from yesterday and the low from Thursday. So you've got this 46.47 area that is begging to be a floor. If we get a negative reaction today to the FOMC, and that negative reaction tests 46.47 and we bounce and hold and make another high, then you have a floor at 22.46 to 22.47. Plain and simple. If you break that area, it opens up a couple of other areas. It opens up 39.75, and then it opens up the 9-day simple at 37, weekly pivot at 28. That all seems to me, absent a very severe reaction down, a bridge too far. I'm much more interested in seeing some kind of a reaction to the Fed that's going to bounce once again at 46.47, and I would ask, don't anticipatorily trade it, but watch that area as potential support. Okay, everybody have a fantastic day. Follow us over at Twitter at Princetontrader. Come check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.